You are watching Hard Data Silver, the desk that does not run on advertiser money, the desk that does not soften the data because it makes you uncomfortable. Spot silver is trading near $23.45 as I record. That is the price. What I am about to walk you through is not. Stay with me. The Federal Open Market Committee convenes on the 11th of June 2026. The rate decision lands in 48 hours. Not in weeks, not next quarter. 48 hours. Jerome Powell chairs a committee sitting on the most contested monetary fork it has faced since the 2022 tightening cycle. The Cleveland Fed's inflation nowcast, published on the 9th of June 2026, places core PCE tracking at 3.1% annualized. That figure is 110 basis points above the Fed's stated 2% mandate. At the same time, the CME FedWatch tool, as of the 10th of June 2026, shows the market pricing as 67% probability of a hold at the current 4.25% to 4.50% corridor. A hold sustains real rates above zero. Real rates above zero are structurally bearish for non-yielding assets. That is the mechanical pressure bearing on silver's spot price right now. But CPI data for May 2026 dropped on the 11th of June 2026, with the Bureau of Labor Statistics reporting a month-over-month print of 0.4%. That number changes the forward rate calculus. A hotter print delays cuts. A cooler revision accelerates the easing timeline. The market is not settled. The Fed is not settled. The first cliffhanger is whether the CPI print forces the FOMC to signal a pivot earlier than the consensus November 2026 cut window. Stay with me. The Silver Institute published its World Silver Survey on the 23rd of April 2026. The data does not require interpretation. Global silver supply ran a structural deficit of 182 million ounces in 2025. That is the fifth consecutive annual deficit recorded by the Institute. Cumulative deficit across those 5 years now stands at 678 million ounces. Mine production in 2025 reached 837 million ounces. According to Metals Focus, the independent research firm contracted by the Silver Institute to compile primary data. That figure represents a 2.1% decline from 2024 output. The reason supply cannot respond quickly is geological and capital cycle dependent. Silver is predominantly a byproduct metal. Roughly 72% of annual mine supply, according to Metals Focus data, is produced as a secondary output from zinc, lead, copper, and gold mining operations. Primary silver miners control only 28% of annual supply. When silver prices rise, primary miners cannot simply open new operations. Permitting timelines in major producing jurisdictions, Mexico, Peru, Chile, average 7 to 12 years from discovery to first pour, according to S&P Global Market Intelligence data published in March 2026. The second cliffhanger is that structural supply cannot respond to a demand event regardless of where the price moves. Stay with me. First Majestic Silver Corp, one of the largest primary silver producers in the world, reported Q1 2026 earnings on the 8th of May 2026. The company reduced its full year 2026 silver equivalent production guidance from 33.0 million ounces to 30.5 million ounces. That is a 7.6% downward revision. Chief Executive Officer Keith Neumeyer cited ongoing grade reconciliation issues at the San Dimas mine in Durango, Mexico, and deferred development at the Jarrett Canyon complex in Nevada, pending capital reallocation. Pan American Silver, in its Q1 2026 operations update filed on the 14th of May 2026, reported a 9% quarter-over-quarter decline in silver production at its Dolores operation in Chihuahua, Mexico, attributing the shortfall to lower silver grades in the current mining sequence. Cure Mining reduced capital expenditure guidance for its Rochester mine in Nevada by $47 million for fiscal year 2026, according to its May 2026 investor presentation. These are not forecasts. These are filed operational revisions from producing companies with audited reserve statements. The third cliffhanger is that producer-level output revisions are compounding the structural deficit in real time. Stay with me. COMEX registered silver inventories stood at 136.8 million ounces as of the 10th of June 2026, according to CME Group daily warehouse stock reports. Open interest in COMEX silver futures on the same date represented 138 million ounces of silver equivalent. That produces a paper-to-physical coverage ratio of approximately 8.3 to 1 on registered stocks. On eligible stocks, the broader category including metal not formally warranted for delivery, the ratio compresses to roughly 4.6 to 1. COMEX registered coverage, meaning the percentage of deliverable obligations covered by registered metal, currently sits at 12.0%. The threshold analysts at CPM Group identify as a stress signal is 15%. The market is already 300 basis points below that threshold. London LBMA unallocated silver, the mechanism that underpins spot price discovery globally, carries a free float that TD Securities estimated in its May 2026 commodities outlook at less than 10% of total nominal obligations. Silver lease rates on the LBMA spiked to 3.2% on an annualized basis in the week of the 2nd of June 2026, the highest reading since March 2020, according to data compiled by Kitco Metals. The fourth cliffhanger is that the exchange-level architecture of silver delivery is operating inside its own identified stress envelope. Stay with me. India's Ministry of Commerce and Industry reported that silver imports for April to 2026 reached 1,042 metric tons, a 34% increase year over year, driven by solar panel manufacturing demand and jewelry sector restocking ahead of the summer wedding season, according to data compiled by the Metals Trade Association of India. The World Silver Institute's Industrial Demand Tracker, updated in May 2026, shows photovoltaic panel fabrication consumed 232 million ounces of silver in 2025. Bloomberg NEF's April 2026 Energy Transition Outlook projects that figure reaching 290 million ounces annually by 2028 based on current solar installation pipelines in China, the United States, and the European Union. China's National Bureau of Statistics reported industrial silver consumption up 11.3% year over year in Q1 2026, with electronics and EV battery component manufacturing identified as the primary demand vectors. Silver ETF holdings, tracked by the Silver Institute across all listed products, globally increased by 38 million ounces in the 60 days ending the 31st of May 2026, the largest two-month inflow since November 2022. The fifth cliffhanger is that two independent demand channels, industrial fabrication and financial products, are accelerating simultaneously into a supply structure that cannot expand. Stay with me. The United States Department of Commerce initiated a Section 232 national security investigation into silver imports on the 4th of April 2026, confirmed by a Federal Register notice published on the 7th of April 2026. A Section 232 finding authorizes the president to impose tariffs or import quotas on national security grounds without congressional approval. The investigation covers silver in all forms, including refined metal, door bars, and intermediate concentrates. The department has a statutory 270-day window to complete the review, placing a potential tariff announcement as early as the 30th of December 2026. Separately, the Commodity Futures Trading Commission published a request for comment on the 15th of May 2026 regarding position limit methodology for critical mineral futures contracts, a category that explicitly includes silver. A revision to COMEX silver position limits would directly cap the paper-to-physical leverage ratio. The sixth cliffhanger is that two federal regulatory mechanisms are simultaneously targeting the import price architecture and the exchange leverage structure of the silver market. Stay with me. Goldman Sachs published a 12-month silver price target of 38.01 per ounce in its May 2026 commodities update, citing solar demand as the primary structural driver. Bank of America, Merrill Lynch raised its silver target to $42,000 per ounce in its June 2026 precious metals outlook, the highest published target on the street, with analyst Michael Widmer identifying the industrial deficit as the dominant variable. JP Morgan's Commodities Research Desk, in its May 2026 metals note, maintained a more conservative 12-month target of $29.50 per ounce, flagging real rate persistence as the primary headwind. Citi's metals team set a $35 worse per ounce target in its Q2 2026 outlook, conditional on the Fed beginning its easing cycle before the fourth quarter of 2026. The range between the most conservative published Wall Street target and the most aggressive is $12.50 per ounce. That is a 42.4% spread measured from the JP Morgan floor to the Bank of America ceiling. The seventh cliffhanger is that the institutional consensus does not exist. Four major desks are priced $12.50 apart on the same asset. Stay with me. The FOMC rate decision on the 12th of June 2026 is the hardest deadline in this script. It is not a summit that gets rescheduled. It is not an investigation with a rolling window. It is a binary event with a fixed clock. If Powell signals a cut at the September 2026 meeting, the real rate trajectory shifts, the dollar index faces downward pressure, and the structural case for silver tightens against a weakening carry cost. If Powell signals an extended hold, real rates remain above zero. Paper silver faces continued selling pressure, and the physical paper dislocation becomes the dominant price mechanism. The June 2026 FOMC decision does not resolve the structural deficit. It does not repair COMEX coverage. It does not close the 678 million ounce cumulative supply gap. What it does is determine the macro overlay through which every other fracture in this script is priced. The eighth cliffhanger is that, in less than 48 hours, the single largest macro variable bearing on silver's near-term price trajectory resolves. Pay attention. Here is the bearish counterargument. This desk gives it in every script, and today is no different. Real interest rates remain positive. The federal funds rate at 4.25% to 4.50% against core PCE at 3.1% produces a real rate of approximately 115 to 140 basis points, historically a headwind for zero-yield metals. The CME FedWatch tool on the 10th of June 2026 shows a 67% probability the FOMC holds rates unchanged. Silver spot has declined 18.4% from its March 2026 high of 28.74. That is not consolidation. That is a trend. Global silver ETF holdings, while recovering recently, remain 94 million ounces below their 2021 peak, according to Silver Institute data. JP Morgan's 2950 target implies only a 26% upside from current spot, modest for a metal being described as structurally constrained. Dollar index DXY traded at 103.4 on the 10th of June 2026, according to ICE data. A sustained dollar above 100 compresses dollar-denominated commodity prices mechanically. Industrial demand from China, while rising, grew at a slower rate in Q1 2026 than in Q1 2025. U.S. manufacturing PMI from the Institute for Supply Management printed at 48.7 in May 2026, contractionary territory. Photovoltaic silver demand projections from Bloomberg NEF are model outputs, not contracted orders. The bear case is real. I'm not softening it. Here's what the structural data says as of the 11th of June 2026. Spot silver, 23.45. Silver Institute cumulative 5-year deficit, 678 million ounces. 2025 annual silver deficit, 182 million ounces. 2025 global mine production, 837 million ounces. Metals focus. Primary mine supply share, 28% of annual output. COMEX registered silver stocks, 136.8 million ounces. 10th of June 2026, CME Group. COMEX paper to physical ratio on registered stocks, 8.3 to 1 COMEX. Registered coverage ratio, 12.0% CPM Group stress threshold for COMEX coverage, 15.0% LBMA silver lease rate, 3.2% annualized week of the 2nd of June 2026 Kitco Metals. India silver imports, April 2026, 142 metric tons, 134% YOY. Global silver ETF, 2-month inflow to the 31st of May 2026, 38 million ounces. Bank of America, 12-month silver target, 42.00. Goldman Sachs, 12-month silver target, 38.00 City. 12-month silver target, 35.00. JP Morgan, 12-month silver target, $29.50. Institutional target range. Spread 1250, First Majestic 2026 production guidance cut, 33.0 million to 30.5 million ounces. FOMC decision deadline, 12th of June 2026. BLS CPI, May 2026, month-over-month print, 0.4%, the 11th of June 2026. Section 232, silver investigation, filing date, 4th of April 2026. CFTC position limit review filing, 15th of May 2026. Dollar index DXY, 103.4. 10th of June 2026, ICE. U.S. manufacturing PMI, May 2026, 48.7, Institute for Supply Management. This is hard data silver. The desk does not run on advertiser money. The desk does not soften the data because the headline reads better the other way. Every number in this script has a primary source. Silver Institute, Metals Focus, CME Group, CPM Group, Kitco Metals, Bloomberg NEF, Bureau of Labor Statistics, S&P Global Market Intelligence, TD Securities, First Majestic Silver Corp, Q1 2026 earnings release, Pan American Silver Q1 2026 operations update. Cure Mining, May 2026 investor presentation, Federal Register, Section 232 filing, April 2026. Commodity Futures Trading Commission, CME FedWatch tool, Institute for Supply Management, ICE Benchmark Administration, Cleveland Federal Reserve Nowcast, World Silver Institute Industrial Demand Tracker, pull every one of them, verify them yourself. That is the entire point of this channel. COMEX coverage at 12.0%, 300 basis points inside the stress threshold, 678 million ounce cumulative supply deficit with no structural repair mechanism, 3 major producers filing downward guidance revisions in the same quarter, Fed decision in 48 hours, hard data silver, same desk, same data, no softening.